So, technical analysts are the contrary of fundamental analysts. Fundamental analysts rely on fundamental analysis to determine a stock's value and whether it's a good investment or not. And technical analysts rely on technical analysis to determine whether a stock is a good purchase or a bad purchase. So, they're both on opposite ends of the spectrum. They both share certain characteristics, but for the majority, they're on the opposite ends of the spectrum with regards to how they determine what to buy and what not to buy. So, what I want to talk about in this video is why technical analysts believe that fundamental analysis is fundamentally not the best way to invest. So, fundamental analysis essentially uses the financials of a company, which might be the PE ratio, the net equity, those types of things, to determine what the cash value of the company is if you were to sell the company for cash. And then they try to buy it cheap. Fundamental analysts try to buy the company cheap, so that way they have a margin of safety. That way, if they were to sell the shares, or if the share price was to decrease, they wouldn't necessarily need to be scared because they already done the research. They already determined that the value. They've already determined what the intrinsic value of the share is, and the market price doesn't necessarily reflect the intrinsic value of the price. This is a pretty good way of looking at a business, because at the end of the day, a company, as I said in my previous videos, is its financials, because a company isn't necessarily its market price. A company does sell. People do buy and sell company stock based on its market price, but the intrinsic worth and the most important factor with regards to a company is its. You could argue its intrinsic value, is its book value. But anyway, to the main point of this video. So, technical analysts, the main reason why they believe fundamental analysis is not the best way to analyze a company with regards to determining whether a company is a good buy or not, is because they believe that all of the relevant information with regards to a company's value is tied into the company's share price. So whatever the company's fair value is on the stock exchange, whatever the company is selling for, and whatever you can buy it for, that price, the sell price, is the price that has realistically encompassed everything that needs to be known with regards to the fundamentals of the company. So technical analysts use a different approach. They don't rely on financials to determine whether a share price is reasonable or not. They just take the share price or the market price as what it is.